Let's clear up one of the most common sources of confusion in small business finance: the difference between COGS and expenses. I get asked about this all the time, and honestly, knowing how to separate these costs can make or break your bottom line. So, let's break it down. Simple, quick, and practical. COGS stands for cost of goods sold. These are the direct costs you rack up to produce or buy what you actually sell. Think raw materials, direct labor, or manufacturing costs. For example, if you run a bakery, the flour, sugar, eggs, and your baker's wages to make that bread. That's all COGS. Now, expenses, also called operating expenses, are all those ongoing costs not tied to directly making your product. Stuff like rent, marketing, utilities, insurance, or your admin team salaries. Here's why this matters. Getting these categories right isn't just about keeping your accountant happy. Your COGS gets subtracted from your revenue to give you gross profit. Then when you subtract all expenses, you end up with net profit. Mess this up, and your numbers don't tell the real story. You might underprice, overspend, or, worst of all, make poor decisions that hurt your business growth. Let me give you some quick, real-world examples. If you run a restaurant, buying steak and potatoes, COGS, paying the electric bill or running Facebook ads, that's an expense. For SaaS companies, server costs and customer support directly tied to delivering your software, COGS. Your office rent or general admin staff, expenses. Retailers' inventory purchases are COGS, but store rent and advertising, expenses. And if you're a consultant, contractor labor you bill to clients is COGS, but your own office supplies and admin salaries, pure expenses. One place I see people slip up: shipping costs, software licenses, or outside contractors. Ask yourself, is this cost directly tied to getting my product or service into a customer's hands? If yes, it's probably COGS. If not, it's an expense. Getting these categories right lets you track gross profit. Compare your business to industry benchmarks and spot where you're winning, or where you need to tighten up. Here's a pro tip: set up clear account categories in your accounting software. Tag payroll items properly, especially if you have both direct labor and admin staff. Reconcile your inventory, and make a habit of reviewing these categories every quarter. Bottom line, knowing the difference between COGS and expenses isn't just accounting trivia, it's real knowledge you can use to price smarter, boost profits, impress investors, and most importantly, make confident, data-driven decisions for your business. If you found this helpful, hit subscribe and head over to jbsmint.com for more tips on making your business financially bulletproof. I'll catch you in the next one.